What's up, YouTube? Eric here, Mr. Fired Up Wealth. It's a new month, November 2021, and you're wondering, what stock should I buy this month? In fact, I've been getting messages, hey, where's your video for your top stocks to buy in November? I've been waiting for earnings. There have been some big earnings. We've got a lot of earnings coming yet on some of my favorite stocks, but I wanted to bring 3 stocks to you today that I think are attractive at these levels. These are growth stocks, but maybe growth at a reasonable price. I'm going to do a blend actually, and you'll see when I get into the stock picks. But I'm going to give you 3 top stocks to buy in November 2021. This is a very difficult thing to do because the market's running really hot. So let's break it down. I'll give you my 3 picks. Now, before I do that, if you have not subscribed to the channel, please subscribe to the channel, click that bell to get notifications. I make videos every single week to try to add value and give you stock ideas. I also am a contributor for the Motley Fool, and you can follow me on the Motley Fool. It's TMF Fired Up Wealth. I also have a link below for Discord. You can join our private community. I also have a link for the Motley Fool. Without further ado, the first stock pick is going to be, well, what do you think it is, guys? So look at this. We've got a company that has partnerships with all of these businesses. And you look at all over the globe, it's an international powerhouse. And you see things like Visa, MasterCard, Discover, Facebook, Google. Look at all the names on your screen. Bank of America, Mercado Libre, on, right? HSBC, some really big companies. Gojek, which we've covered on the channel. And you see like AliExpress on there. Like what stock could this possibly be? We're one of the world's most recognized and trusted brands in 2020, okay? Listen to these stats. People are 54% more willing to buy when a business accepts PayPal. 59% of PayPal users have abandoned transactions because PayPal wasn't available when they tried to check out. Those are some powerful stats from their Investor Day presentation. So payment processing, PayPal, Braintree, you've got iZettle, you've got Honey. They paid probably too much for Honey. But you look at that, you got checkout, you got payment processing, you got payouts, you got point of sale, you got risk services, marketing tools, business services, connect to 377 million active accounts across the entire globe. PayPal is definitely a stock that's been beat down. We're gonna look at a chart later in this video, and I'll show you where I think the price might be attractive. So looking at the fundamentals, strong balance sheet, $10 billion of net cash. That's billion with a B, $10 billion of net cash. $5 billion of free cash flow this year is expected, a 56 price to earnings or PE ratio, and a 39 forward PE. 11.4 price to sales. Now you look at Visa and MasterCard, Visa's price to sales is 19.5, and MasterCard is 18.3. Those are pretty hefty premiums to PayPal when you look at that price to sales number. PayPal has BNPL, or buy now, pay later. So this is an article from Forbes. And if you own a firm, this is not to bash a firm. I think a firm could probably do well. No innovation with Affirm holdings, just overvaluation. Now, if you want to look at this report in detail, you can find it on Forbes.com. This report helps investors see how extreme the risk is for a firm based on large competitors like PayPal that are taking market share rapidly. Costs are rising faster than revenue and driving deeper losses. A lack of pricing power due to an undifferentiated service. Doing the math, the stock price implies a firm will be the largest buy now, pay later firm in the world as measured by gross merchandise volume, or GMV. So PayPal, buy now, pay later. They launched this in 2020. A lot of people don't even know PayPal has it in the United States, France, and the United Kingdom. And you can see the Q4 2020 results. They had $750 million in volume and so on. Now, recently, this was just a couple months ago, PayPal announced they're going to pay $2.7 billion for this Japanese company here. This company, of course, is Paidy, so it's like paid with a Y at the end. It's a Japanese firm. So they are trying to expand it globally and expand in other countries. PayPal also, in recent news, this is from the Wall Street Journal, abandoned Pinterest takeover after shareholders balked. So PayPal actually considered acquiring Pinterest, and the shareholders said, we don't really like this. It's diversification. It's not really in our core competency. Let's think about this twice, and they backed out. So this was a really interesting development. Part of the reason why both this stock, PayPal, as well as Pinterest are trading lower. Now, there's actually another really interesting reason why this stock and a few other names are trading lower, and I'm going to show you that in a couple minutes. You'll definitely want to stay tuned to see that. Now, one thing to note, if you've been following the channel, we did a video on Mercado Libre, and we talked about how PayPal has a partnership. In fact, this is from July 30th, 2020. PayPal and Meli, Mercado Libre, integrated payment systems in Brazil and Mexico. So is it too much to think that maybe that buy now, pay later might actually be rolled out in Mexico, Latin America? Seems like a strong possibility in the future, right? So PayPal specifically for buy now, pay later. Easy integration, included an existing take rate, no additional fees for merchants at all. So it's really easy to streamline. There's really no reason for merchants not to do it. In fact, there's millions of merchants. I'm going to show you more in a second. No credit risk to merchants. Ability to rapidly scale across two-sided network. Buy now, pay later with pay in four is what they call it. Check out at millions of online stores and split your purchase into 4 interest-free payments with no late fee. There's no impact on your credit score, and it's backed by PayPal. Now, there's already a lot of reasons to be bullish on PayPal, especially at these price levels. We're going to look at a chart here in a second. I'll show you where I think the stock might go. But this buy now, pay later, it's a big movement. And I think a lot of people just don't realize that PayPal is actually in it. But I want to show you one thing here that could impact this stock, especially in the short term. Okay, so this is PayPal on Fidelity's website. You can see it's a very large cap, $269.62 billion. Today, it's trading down 1.25%. It's trading around $226 a share. The PE ratio on here is 55.97. Of course, the forward PE is lower. It's up about 22% over the last 52 weeks. That PEG ratio 5-year is 2.3. But now take a look at this, guys, because I think this is part of the reason why we're seeing some bearish sentiment. I think there's actually several factors. We talk about Pinterest, but this is definitely one to consider. So when you think of MSCI, okay, so they own the GICS. So that's the Global Industry Classification Standard. If you followed the channel, you watched the DJIF series, you remember I did a video that breaks down this GICS or GICS, and it shows you the different industry sectors. And if you haven't subscribed to the channel, definitely subscribe and check out the playlist, because there's a playlist that covers exactly this to help you diversify your portfolio. So listen to this, it's really important. Some of the tech sector's largest companies could be reclassified. Now, if you followed me and you've watched that DJIF series, you know that Visa and MasterCard, in fact, PayPal, Square, my fintech, I include in my financials, okay? So normally when you think of financials, you think of like old school banks, and you think of PayPal, you think of information technology. Well, they're actually considering moving some of these big companies out of that technology sector and into the financial services sector, which could actually impact the stock negatively. It says Visa, MasterCard, and PayPal would move to the financial sector. ADP and Fidelity National Services would join the industrials. So ADP, that processes your checks, and Fidelity National Information Services, those are generally in like fintech type ETFs. They could be considered industrials. The GICS developers say that the data processing services provided by these firms are less about technology and more about business support activities. Now, of course, PayPal is a solid company, but if they classify this as the same as a bank, an old school bank, well, that could impact the stock, because the way that institutional investors and hedge funds and pension plans, the way they invest, it might actually make it more complicated, because you might look at a stock like a Visa or MasterCard and say, well, this is pretty good DGIF. It has nice growth, pays a little dividend. It's a nice blue chip, and I can put it in my tech sector. Well, now it's going to be classified with the bank. So, I mean, depending on how you look at it, it could be good or bad, but it definitely is something that in the short term could be impacting the stock price. Okay, so PayPal is the first pick. Here is the chart that I promised. Now, these orange lines I've drawn are on the S2 and the S3. These are the Fibonacci. So this is the Fibonacci. This is on TradingView. So if you look at this, we drew this up. This is actually not a very good sign right here, right? This is a bearish signal, so that's crossover. And so you could look for possible support around this $220 range, or you could see it go lower, maybe $200 to $203. Now, the thing is that earnings is actually coming up. Earnings are coming up here in a few days. So earnings are actually on November 9th. So you have to be a little bit careful there, because, I mean, the thing is earnings could be great and it could pop anytime. This really could rebound anytime. I do think it's an opportunity even at these levels. If you look at a long-term investment, you can see it's broken all the moving averages and it's in a downtrend. And there's a few different catalysts for that. We're going to need to have earnings to kind of break us out of that catalyst. So it's always hard to buy before earnings. What I typically do, I've got a full position on PayPal. I've been in it for a while. What I typically do is I'll buy maybe a fifth or a fourth and then wait for earnings. And if the earnings are really good, you can always add more, and you can even dollar cost up if you really believe in the company. Because quite frankly, it's not expensive even at these levels. Now, there's a risk. If the stock falls and you buy all your shares, then you're in trouble. So I'm not a financial advisor. I can't tell you what to buy or sell or how to do it, but I would nibble some shares and see how earnings goes and then reassess from there. But PayPal is the first stock on the list. Which one's next? So the next stock I want to cover is UiPath. I've covered it on the channel many times, and I'm not going to go into detail. Again, if you're new to the channel, subscribe, check out the playlist. There's a couple of deep dive videos on UiPath that let you know what they do and shares a lot of fundamental analysis and research about the company. Now, this is from Chart Day. If you're interested in Chart Day, we do it every Wednesday. We just got done with our morning session today. Every Wednesday in Patreon Discord, we do Chart Day where people give me tickers and we look at tickers. I draw them up and we record that for our members in our private community. Now, we said that this was probably going to break out kind of this downward channel. It did get down to like $47.25. Went a little bit lower than maybe a lot of people thought. I thought it would probably hold at $50 range, and it did break that slightly, but you can see it's actually acting pretty bullish. It's above all the moving averages here, and I'm not saying you should necessarily chase it here, but it's something to keep an eye on. If you can get it, especially if it gets to 50 or less, I think it's an opportunity. It's proven to find buyers in that range. I do like Path as a long-term play. It did have, quite a shakeout. Some of this shakeout had to do with shares, and there was some confusion on it, but all those shares from the IPO, that lockup expiration, it's gone, it's done. So we've kind of shaken out some of those weaker hands. A lot of people are becoming more and more bullish on this. Now, of course, Microsoft is a big competitor. These guys deal with robotic process automation. Check out the channel for more details. I'm personally bullish on this one. It's one of my larger holdings in the portfolio, UiPath. Now, I did promise some growth at a reasonable price, and Meta Platforms Inc., Facebook. So right now the ticker is FB. It's going to be MVRS in the near future. Now this one is trading about 23 on the price to earnings. The PEG ratio 5-year is 1.1. It's up about 25% over the 52-week period. So it has been a little bit of a laggard. You can see it fell from about $384 was the 52-week high, probably the all-time high. So $384 all-time high, and it's fallen down to $327. I think this one is an opportunity. Let's look at a chart. Okay, so you can see it broke down, actually broke past the 200-day moving average, this red line, kind of came down and kind of kissed this old S3, and it's kind of working its way back up. So it is back above that 200-day moving average. You can see a little bit of a cross there. So what you've got is this is the 50-day coming below the 100, generally not always a great sign. So I think this stock will have some choppiness. I think it's one that I'm not necessarily in a hurry to go buy. This is on my watch list. I notified the Discord community. This is back on my watch list. I think that the metaverse thing it's a long-term play. Okay. So if you're buying Facebook, this probably isn't, something you're doing as a trade. You're buying it because you see value in that 20 to 23 PE ratio, and you're holding it as a long-term investment for several years. This metaverse idea could take 5-10 years to fully develop, right? So this is a long-term play. If you're interested in me doing a deeper dive video on the metaverse, why don't you let me know in the comments below? That's something I'm considering doing, giving you some of my favorite stocks and maybe even crypto that kind of cover the metaverse. I'd be happy to do a feature kind of film, a 30-minute type film that covers the metaverse in detail. Drop a comment and let me know. If you're new to the channel, you definitely want to be here as a subscriber. This is a great community and we try to learn from each other. If you want to take your game to the next level, join the Patreon community. Check out my write-ups on Motley Fool. Again, the links are below. I appreciate your time and attention. If this was helpful, hit the like button, drop a comment. Have a great rest of your day. Take care.